This is Nightly Business Report with Sue Herrera and Bill Griffith.
Closing in, the S&P 500 moves closer to a new high as investors bet the bull market has further to go. Rocking the boat as trade talks heat up this week, we'll take you inside an industry that's getting hit hard by retaliatory tariffs. And retirement returns. Savings isn't enough. You also have to be aware of fees that can eat into your earnings. Those stories and more tonight on Nightly Business Report for this Monday, August 20th. Good evening, everyone, and welcome. Bill Griffith is off tonight. We begin with the markets inching back towards new highs. Optimism over trade talks sent shares of industrial, energy, and material stocks higher. Deal-making activity also put investors in a buying mood, and it sent the S&P to within 1% of a record and the Dow to its highest close since February. The Dow Jones Industrial Average added 89 points to 25,758. The Nasdaq was up 4. The S&P 500 gained 6. On Wednesday, this bull market will be 3,453 days old, making it the longest in history. Mike Santoli takes a look at the three phases of this market milestone.
The 320% gain in the S&P 500 since March of 2009 has unfolded more as a three-act drama than a simple story of ever-rising stock prices. The first act was a powerful rebound from a 13-year low in the depths of the financial crisis in early 2009 as the economy emerged from the Great Recession. The S&P 500 doubled over the next 2 years before the European debt crisis triggered a sharp correction of nearly 20%. After Europe stabilized with the help of central bank stimulus, stocks went sideways through the 2012 election until the next rally phase kicked in and lifted the market by another 35% or so, thanks to healthy corporate results and surging tech shares. The next interruption in the upward march came with the emerging markets recession and earnings declines in late 2015, ushering in yet another sideways phase through mid-2016. Since then, stocks have ridden tax cuts, accelerating U.S. growth, and a corporate profit boom to another 35% advance by January of this year. With its resilience and durability, this three-stage bull market is about to become longer than the 90s surge, but it hasn't been stronger. The S&P is up an average of 15% a year since March of 2009, while the run from late 1990 to March of 2000 delivered about 18% a year. This is one reason some strategists see the chance for stocks to push higher still before an ultimate peak is made. Bull markets tend not to die of old age, but from recession, a corporate earnings downturn, or a financial shock. Those things either are not in clear sight or are impossible to predict with precision. Still, mature bull markets do tend to become more accident-prone as a cycle ages, with more bouts of volatility and a slower pace of gains as more defensive investments gain favor. Is that what we've been witnessing in the months since the January record high and choppy recovery that's followed? Or has this just been another intermission before the bull market's next audience-pleasing act? For Nightly Business Report, I'm Mike Santoli.
Venezuela is trying to save its economy from collapse. The government is devaluing its currency by 95% and pegging it to the country's oil-linked cryptocurrency. The president also announced a hike in the minimum wage by more than 3,000%, which will be the equivalent of about $30 a month. All of this in an effort to ease rampant inflation. So with Venezuela being an unsettled global hotspot, where are some other places around the world that you should be watching a little bit more closely? Andreas Garcia is here to fill us in on that. He is founder and CEO of Zoe Financial. Welcome back, Andreas. Nice to see you.
Thanks for having me.
I guess the market that comes first to mind and that has created a lot of market volatility is Turkey. Yet when you look at the economy of Turkey and its interaction with the U.S., I wonder if the market's overreacting to the troubles there.
Yeah, the way that I would put it is, for a U.S. investor, Turkey's volatility, I think, is something that we'll see in the short term. If you're a Turkish citizen, totally different situation. If you are an emerging market investor in places, say, like South Africa or Brazil, where their currencies has seen a lot of volatility because of what's happening in Turkey, it might be a different story.
Which is the market that you were watching the most closely? In the past, it has been China and China's relationship with the United States. Is that still the case?
Yes. If we put it in the context of what matters to a U.S. investor, I think the situation between the United States and China when it comes to trade relations by far is the most important one. Places like Turkey, places like Venezuela, from a global citizen perspective matter, from a U.S. investor, less so.
Now, let me turn you to some of the other markets that have started to see increased volatility. And some of them are in Europe. Italy is one. And Italy was at the heart of the 2008 financial crisis. Do we need to worry about Italy?
I would use the same framework. If I am an Italian citizen right now, this is a big concern, right? You have a situation where the government is actually looking to spend more of their money, and they already have the largest gross debt in Europe, right? So that's concerning. From a U.S. investor perspective, less so, because I don't think Italy's situation provides systemic risk the same way that it did back in 2012, 2013, when the European crisis was in full force.
So if you're an investor and you have allocated funds to some of those markets in Europe, like in Italy, like a Spain, Portugal, do you change that right now or not?
No, the answer for me is no, right? The way that I look at it is if your portfolio, if your globally diversified portfolio is breaking because of what's happening in Italy or what's happening in Turkey, then you have to kind of rethink the overall strategy that you have. Mm-hmm. But if you have a well-diversified portfolio, that is why you have international exposure versus U.S. exposure, because some things will zig when others zag. So I wouldn't change your overall strategy because of headline risk. Quickly,
where are you putting cash to work outside of the United States?
Yes, that is, I think, the right question. If you were to look at abroad and you were to look at the developed world versus the emerging world, the emerging markets look a lot more attractive from a valuation standpoint. Mm-hmm. Having said that, the caveat that I would say is, as a U.S. investor, what that basically means is you have to be accustomed or get ready for more volatility than you see here in the United States. The more risk you're going to see, the higher potential reward you're going to see.
Andreas Garcia, thank you so much.
Thanks for having me.
Andreas Garcia with Zoe Financial. Greece is formally ending its bailout program after 8 years and billions of dollars in loans. As part of loan agreements with the IMF, the European Central Bank, and the European Commission, Greece agreed to drastically cut spending and implement economic reforms. Today, the Greek economy is 3/4 of the size that it was in 2007, and the deep cuts to public spending are set to continue. The bailout exit means, though, that the country can once again borrow money at market rates. Deal activity added to the optimism on Wall Street today. Pepsi agreed to buy SodaStream for more than $3 billion. It is the latest move by the company to diversify away from sugary drinks, which its CEO says is important for the company's future. Shares of SodaStream gained 9%. Pepsi fell just a fraction. And Tyson Foods said it would buy the privately held Keystone Foods for more than $2 billion. The acquisition is part of Tyson's strategy to increase its product offerings and expand globally. Keystone Foods is a supplier of chicken, beef, and fish to the major fast food restaurant chains, as well as convenience stores. Shares of Tyson rose more than 1%. Investors will be focused on the Federal Reserve this week. And just today, the president of the Atlanta Fed said that the economy is strong and ready to move on from monetary stimulus. Raphael Bostic added that he is sticking with his expectations of one further interest rate increase this year, as global events like Turkey's currency crisis increase risks to the economic outlook. But if the Fed does hike rates, the president might not be all that happy. In an interview with Reuters, President Trump said he'll criticize the Fed if it continues to hike rates, and that the central bank should be more accommodating. In that same interview, he said China was manipulating its currency and that when the U.S. puts tariffs on China, China artificially lowers the price of the yuan. Well, investors pay close attention, of course, to trade talk, and this week it takes center stage in Washington. Kayla Tausche looks at what's on the agenda and what's at stake.
The White House could play host to another trade truce, with China's Vice Minister of Commerce leading a delegation Wednesday. A new effort from Treasury Undersecretary David Malpass has White House officials optimistic after higher-level talks in June fell short.
If you want to start a deal, you got to start in the weeds. I think of David Malpass as kind of our weed whacker, right? He's over there in Treasury and he knows the details of stuff that we really have to bring to the Chinese. And so the fact that they're here this week, it's a very positive sign.
Washington isn't fully letting its guard down against Beijing. This week alone features a victory lap on stricter foreign investment rules and meetings with Europe and Japan on how to challenge China on a global stage, not to mention a new round of tariffs that could take effect Thursday. The goal of the meetings to smooth tensions before President Trump and President Xi attend the G20 and APEC in November.
My concern is that making progress on the theft and counterfeiting of intellectual property is for sure possible. But the notion that structurally that China is going to change the state's support of their economy, I think, is very far-fetched.
Talks with China are the highest stakes item on the trade agenda this week, but the White House is also moving forward with NAFTA negotiations with Mexico and filling in a trade agreement with Europe, trying to focus the trade war so the U.S. is only fighting on one front. For Nightly Business Report, I'm Kayla Tausche in Washington.
Well, one industry that is getting hit hard by retaliatory tariffs is boating, and many executives aren't sure what the future holds. Contessa Brewer has the story from Tampa, Florida.
Florida is known for its coastline and marinas, but its boating industry is being buffeted by a storm over global trade.
The trade war is kind of hitting us from several sides.
Peter Truslow is the CEO of Bertram Yachts, a manufacturer of high-end vessels.
What really hurts us now immediately is the EU import tariffs of 25%.
2 solid sails stalled in the water because a 25% tariff translates to $1 million tax on a $4 million yacht purchase, and the would-be European buyers balked. Nationwide, manufacturers export 15% of boat and engine production. More than 2/3 goes to Canada, Mexico, and the European Union.
Yes, the 1%ers, they don't need a yacht. And in the case of Bertram, where we're talking about the finest yachts in the world, the prices are high. Most of these people already have a yacht, so they just choose to delay the purchase or buy another type of yacht. And unfortunately, that yacht might be built in Europe.
The U.S. Chamber of Commerce says these tit-for-tat tariffs are threatening to sink nearly $200 million in overseas boat trade that Florida does every year, to say nothing of an additional $70 million plus in yacht sales.
It's a showstopper. There will be no sales in Europe until these tariffs are lifted.
And those aren't the only tariffs making for rough waves. Costs are soaring for steel and aluminum used in boat manufacturing, and Trump's 10% tariffs on Chinese goods have increased the costs for all kinds of materials, from the imported fiberglass to navigation systems to the small hardware covering the yachts.
The blue-collar workers, they're the ones that got hurt by the luxury tax, and they're the ones that get hurt by this. Yeah, everybody's worried about jobs. Somebody's going to lose their job, and nobody likes that.
And while domestic demand is strong for Bertram Yachts, the slowdown in exports is forcing a serious second look at expansion plans, additional hiring, and capital expenditure.
We see no evidence of progress, and we have no support from the government.
So until there's a peace treaty in this global trade war, Florida's boat manufacturers are bracing for a bumpy ride. For Nightly Business Report, Contessa Brewer, Tampa, Florida.
It is time to take a look at some of today's upgrades and downgrades. Nike was upgraded to positive from neutral at Susquehanna Financial Group. The analyst cites the Dow component's improved product offerings and market share gains. The price target is $93. The stock rose 3%, making it the best performing Dow stock today. Qualcomm was upgraded to buy from neutral at Rosenblatt Securities. The analyst there cites the benefits from 5G smartphone growth over the next few years. The price target stays at $70. The stock rose a fraction to $66.16. J.P. Morgan says Tesla's stock could fall to $195 a share by December. The analyst says Tesla's move to go private is much less developed than he had earlier presumed. J.P. Morgan has an underweight rating on the stock. Nonetheless, the stock rose nearly 1% to $308.44. Still ahead, how to protect your retirement and avoid hidden fees. A strong day for airline stocks. This after a Wall Street analyst said the industry continues to see solid demand, along with rising fares and slowing capacity growth. According to Cowen, this trend should continue through the end of this year and into the first half of the next. That sent American, United, Southwest, Delta, and JetBlue shares higher in trading today. And if you are taking a flight in the U.S., there's a good chance it's operated by one of the 4 largest airlines in the country, which dominate air travel. But for those living in rural areas, those flights don't always depart from a convenient location. And that is why a number of low-cost carriers are testing out a new approach that could result in a new source of revenue. Phil LeBeau has our story.
They are small, but growing quickly. Spirit, Sun Country, Frontier, and Allegiant Airlines. One industry consultant calls them Wildcatter Airlines, because much like wildcatters in the oil business, these carriers are looking to hit it big in smaller cities the big airlines have often overlooked.
These airlines, these Wildcatter Airlines, they're not after brand loyalty. They're after simply getting discretionary dollars that wouldn't have been used for air transportation before.
Call it riding the wave. As the economy has surged, so has the number of people looking to fly, now well over 800 million annually. Yes, most of them fly big airlines, but many have to take small commuter or regional jets to larger cities where they can board a flight to the final destination. But Wildcatter Airlines like Allegiant offer a limited schedule of nonstop flights from cities like Rockford, Illinois, to popular destinations like Las Vegas, an enticing option for those in smaller cities who want to get away.
The majority of people on these airplanes today are not people who had planned to fly. They're using excess discretionary dollars. Instead of buying a new refrigerator, they're going on a trip.
Much like a wildcatter who sticks with a well as long as the oil is flowing, Wildcatter Airlines will add flights to overlooked markets as long as there are enough people looking to fly. And if demand in a smaller city slows down, these smaller airlines will quickly trim their schedules. But with the economy humming along, these Wildcatter Airlines are adding more planes and more flights, changing how many in rural America take a trip. Phil LeBeau, Nightly Business Report, Chicago.
Walmart and Anthem team up to help seniors with drug costs. That's where we begin tonight's Market Focus. The health insurer Anthem said it is partnering with Walmart to launch a program early next year that would allow patients enrolled in Anthem's Medicare Advantage plan to receive over-the-counter treatments and pain medications at lower costs. The partnership seeks to give seniors greater access to these products, either in-store or online. Walmart shares finished down nearly 2% to $96 even. Shares of Anthem were off a fraction to $263.17. Estee Lauder reported stronger than expected earnings as sales grew in nearly every category. The cosmetics company said demand was especially strong for its skincare products in airport duty-free stores. I've been there a couple times. Estee Lauder says that it sees profits for the year coming in below estimates, but investors shrugged that off. They sent shares up more than 3% to $140.56. And the generic drug maker Lannett warned that its 2019 financial performance could come under pressure after a key distribution contract was not renewed. The agreement expires in March, and it applies to 3 products. Lannett said it is still assessing the impact. Shares of the company plunged 60% to $5.35. Well, as we've been telling you, competition in the fund industry has fees dropping sharply, sometimes to zero, in an effort to attract and keep customers. As we've reported, Fidelity became the first to offer 2 zero-cost index funds, while Vanguard eliminated trading fees on most of its ETFs. But there are other costs that can sink your retirement savings. Sharon Epperson is here to explain what you should watch out for. It's always great to see you, Sharon.
Good to be here, Sue.
So what kind of fees are these that eat into your returns and your savings?
Well, the first are expense ratios to think about. Those are the annual fees on the mutual funds, and that can be, maybe the average is 0.5%. Sometimes it's more than 1%. So you really want to watch out for those fees. But there are many more. The sales load, the commission that you may pay a broker who buys or sells your stock or bond, mutual fund transaction fees. Some people think if I put it in a mutual fund, there must be no fees for the transaction. But if a broker is buying or selling that in your IRA, there could be fees attached to that. And then you have to think of the 401k administrative fees. You put it on autopilot. You think your retirement savings is fine. It is fine, but there are still fees attached to that. And so you have to consider it. And just as you're getting compound growth in your investments, you're also compounding the impact that those fees could have on your savings.
So is there a way to quantify how much it affects your, I mean, I'm sure it depends on the fee and the type of products that you have in your account. But what kind of an impact might it have?
Well, you have to just, first of all, add them all up, and you can maybe get to 2% rather quickly. Take an example of a $100,000 investment, and over the 25-year period, you get a 6% return every year. That would be great if that happens every year. And that you'd end up with $430,000 if there are no fees. But there likely are fees. So say the fee is about 2%.
Wow.
Then that cost eats $170,000 into that $430,000, and you're left with $260,000.
That
so
is
it's
really
significant.
dramatic.
A 40% reduction in your retirement account balance, it could happen.
So you always are wonderful at making it actionable for our viewers. So what can we do to either cut down on the costs, eliminate the, what's your best advice?
Well, no one likes to read the fine print, but that's what you need to do. You need to find out what your fees are, what expense ratios you have, what administrative fees you have, find out what you're paying. If it's a 1% annual fee or higher on a number of mutual funds, say in your 401k or an IRA, you need to compare and try to get a lower fee fund. And then keep in mind the advice that you're getting. A lot of us, including myself, need a little advice, but we got to pay for that. So if you have a robo-advisor, that's going to be less expensive than having a human advisor, but there's still a fee attached to that. And if you're having a target date fund that automatically gets more conservative as you get older, that's going to be more expensive than a plain old index fund. So
All right.
keep those things in mind.
Read the fine print.
Sure.
Sharon, thank you so much.
My pleasure.
Sharon Epperson. Coming up, taking a swing. Meet the professional golfer who's playing with a newfound purpose. The fight against muscular dystrophy gained more traction today. The pro golfer Morgan Hoffman rallied dozens of sports and business celebrities to join him at his foundation's first ever Celebrity Pro-Am tournament to golf for a cure. Dominic Chu was there in Paramus, New Jersey for us.
Muscular dystrophy is a degenerative disease that leads to muscle weakness and eventual disability. It's a disease with no cure, and pro golfer Morgan Hoffman wants to change that.
My story is I was diagnosed with muscular dystrophy in late 2016, and I didn't want it to be about myself, and I knew that with my platform I can help so many other people.
That rally cry has resonated with many of Hoffman's peers, including golf star Rory McIlroy.
I didn't know really about the struggles Morgan was going through until I read his Players Tribune piece last year, and I was just so moved by it. And I thought, you know, here's a guy that's, you know, being dealt a pretty bad hand, but he's trying to make the most of it, and he's trying to help other people with the cause.
Trying to focus on the future and what can be done today is the driving force behind why Hall of Fame football star Jerome Bettis is supporting it.
It's critically important for us to support these kind of causes because we have a platform and we can make a huge difference. You see an event like this and you see the financial ramifications of an event like this. You know, he's going to raise a lot of money, and it's going to go to a lot of research, and someone, maybe not Morgan, but someone down the road is going to benefit from an event like this.
Morgan Hoffman's foundation has already raised over $1 million just so far this year and has plans to do a lot more in that campaign to build awareness for neuromuscular diseases and to fund a race for the cure. For Nightly Business Report, I'm Dominic Chu in Paramus, New Jersey.
And on that note, that does it for Nightly Business Report tonight. I'm Sue Herrera. We want to remind you, this is the time of year your public television station seeks your support. Thank you. Have a great evening, everyone. We'll see you tomorrow.